Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, October the 14th. The corn and soybean markets posted modest gains on tightening U.S. supplies. The harvest progress, the barge traffic problems slowing the grain shipments due to low water levels on the Mississippi River limited that upside. On Wednesday, the USDA estimated that this year's U.S. corn ending stocks will be the lowest in 10 years. And the U.S. soybean stocks to use ratio will also be the lowest in 9 years, provided a boost to the markets for the week. The after effects of the EU drought and ongoing fighting in Ukraine also provided some support. Our November canola contract this week was down $6.30 a ton, and it closed out at $862.30. The canola traded both sides of unchanged this week, but it closed lower on profit-taking today. Support from the higher soybean market and a lower Canadian dollar limited that loss. The November soybean contract was up 17 cents a bushel this week. It closed at $13.84. The December corn contract, well, it was up 7 cents for the week, and it closed out at $6.90. And our December oat contract this week was up 19 cents and finished the week at $3.98. The spring wheat, Minneapolis spring wheat December contract, well, it was down this week. It was down 14 cents and closed at $9.54. The wheat markets, well, they ended a volatile week with double-digit losses. The on-again, off-again concerns over the Black Sea shipments, the drought in the southern U.S. plains, and USDA's estimate for U.S. wheat ending stocks to be the lowest now in 15 years had the markets higher early in the week. However, the higher U.S. dollar limited the gain, and profit-taking here on Friday saw the markets close lower for the week. Our Canadian dollar, well, it was down this week. It was hit down. It was down 85 basis points and closed at 72.00. The leading that charge lower was crude oil. Crude oil lost $7 a barrel this week, and it closed out at 85.64. For next week, well, we do hope to get back into the fields in Manitoba and in eastern Saskatchewan, as we still do have about 25 to 30% of the harvest left to finish, and the push will be on. For canola, well, we're going to look for prices to once again challenge that $900 area, which should provide some $20 plus pricing opportunities. For wheat, well, it continued to chop back and forth, but it has been holding in that 950 to 960 area, and we'll look for wheat futures to attempt to get back up into that 10 and a quarter, maybe as high as 1050 over the next couple of weeks or so, and this should get us to our $13 cash price target area. I'm Ed Baldwin with your weekly wrap-up for Friday, October the 14th.